Home prices were through the roof in 2020, despite everything the year gave us. Since the beginning of the COVID crisis, our team has had a ton of buyers put off buying a home, and the concerns they had were more or less the same. We want to wait and see what happens. We think prices are going to come down. There's going to be a wave of foreclosure deals that hit the market, and if we wait a little longer, we can get them. Why buy now at the top of the market? This feels like a bubble, and I'd like to wait until it pops. I can't find anything I like at my price point, and various other concerns that are basically very similar to these. Now, these are legitimate concerns, and I understand why people have them. You'll find plenty of headlines that play into this idea of a bubble or a looming market crash in 2021 as well. Admittedly, it can be difficult to see prices rising and rising and rising with no end in sight, and it can be disheartening while you're sitting on the sidelines trying to figure it out. It's also true that there will be something of a foreclosure crisis at some point in the future, but there isn't any evidence now that there will be enough foreclosures to swing the market in the other direction. Interest rates are also artificially low right now. They could go back up, and this would weaken buying power and put downward pressure on prices. This idea of a crash or price drop even seems to me to be partly based in fear and part cherry picking of relevant data points. Nevertheless, buying a home is one of the biggest decisions that most of us make in our lifetimes, so it's an important conversation. What if I told you that it's extremely unlikely that we'll see a price drop of any kind in 2021, though? I mean, we all know there are ups and downs in the real estate market, and it would be great if we could predict the bottom, buy at that low point, and then turn around and sell when the market crests, thereby maximizing our profits and minimizing all of the risks. It's a great plan, and I can see why many people adopt this strategy as one of the main decision points when they're buying and selling real estate. I want to weigh in here, though, with my opinion of what I think is actually going to happen as 2021 unfolds. It's an important topic as we end 2020 because it's likely that you're going to hear louder and possibly even louder warning signs that the market is going to shift and that prices are going to start to drop. Then you may find yourself being one of those people like the people I described earlier in this video and remain sitting on the sidelines looking for an opportunity and looking back a year from now only to realize you should have bought a house maybe even 2 years ago at the beginning of this crisis. It can be very frustrating. At that point, you will have lost 2 years of significant appreciation and equity building, along with the additional tax benefits that come with homeownership, and also paying down of the principal balance, which will result in banking yourself even more equity and more security. There's a lot to look at here, so let's start with where the market is sort of right now and see how the market's changed over time. This chart that you're looking at here shows the median price of a home in the United States going back to 1980. And as you can see when you're looking at it, there's really only one significant period of price decline in the last 40 years in the United States, and that took place really basically from around the summer of 2007 through the end of the first quarter in 2009, depending on where you were in the country. So really the worst case in the last 40 years saw prices decline for 2 years. Now, it did take about 6 years for the prices to get back to pre-housing crisis levels, but that's really only for a very small group of people who bought at the summer of the peak. So there's a couple of important points or takeaways here. One, we have to recognize that prices have fallen in the past, and that makes it easier for people, myself included, to think it can happen again. It's natural. And in my opinion, though, it's a near impossibility that the 2021 financial situation could even remotely resemble anything like what was happening back in 2006 through 2008. This is not a world financial crisis we're in right now like what happened then, which actually began in the housing sector with an overextension of credit. Instead, we find ourselves in a situation caused by COVID, which is a non-financial, temporary outside influence that's going to begin dissipating because of the vaccine as we move into 2021. Here in Atlanta, for example, we can see the same pricing trends generally that we saw across the country in this chart. The biggest difference is that the cyclical price rise and drop is a little bit more stable than it was around the country. when I look at this, these aren't the kind of charts that indicate that prices are about to drop in any way. We certainly need more information to draw a responsible conclusion, but we do need to use this as one of our data points. Next, I think that it's important to address some basic fundamentals, supply and demand. And so you can look at this next chart here and you'll see that supply have been dropping basically since 2010, and they dropped throughout 2020 as well. We know that when COVID became our reality early this year, supply was still dropping. It shrank even further, and immediately once many sellers decided to keep their homes off the market in the spring or pull them off of the market because of COVID, and it's certainly understandable. Sellers were worried about having people in and out of their homes during a pandemic. And as we end 2020 and 2021 begins, we have COVID case numbers that are higher now than at any other point in time. We're still months away from full distribution of the vaccine at the earliest. So this means supply is going to remain low. People will keep their houses off the market. Here in Atlanta, we have the lowest supply of homes on records, basically shrunk every month in 2020, since the shutdown at least. And we currently have about a 1 month supply of homes across metro Atlanta at almost all price points below $1 million. The flip side, of course, is demand. And admittedly, back in March of 2020, I don't know of anybody who believed that demand for housing would be anywhere near as high as it turned out to be. In fact, most reasonable people felt as though it would be lower. In reality, the demand for housing in 2020 outpaced the demand for housing in 2019. It's hard to imagine that demand could be higher in 2021 than it was in 2020, than it was in 2019, even before that. But there are certain indications that it certainly is at least possible. Most importantly, the Fed has pledged to keep interest rates near zero, and many of its members say that they would like to keep it that way as far out as 2023. Low interest rates is certainly going to help keep demand high. So the fundamentals make it very hard to see any path that leads to prices dropping when we look at the supply and demand perspective. Here's a better, maybe a real world example of what I mean by that. So you can see that in this chart at the time I'm doing this video, there's about 7,800 detached homes for sale in Atlanta and a 1 month supply of homes. So to reach a balanced market, neither a buyer's market or a seller's market, we need about 6 months of inventory. If you put it another way, if 2021 sales approximate 2020 sales volume, we're going to need 6 times the number of listings to reach that balanced market. So instead of the 7,800 listings that we have now, we're going to need it to grow 6-fold, well over 46,000 listings. That's almost an impossibility, especially for it to happen in a single year. So I don't see it happening. Now, there are some things that are going to begin to happen probably in the second half of 2021 that may play a role in the market cooling some, but I don't see it changing the balance. And we've seen some states already lift the foreclosure moratoriums, and that means that sometime late in 2021, perhaps maybe into 2022, we may see some of those properties, some of those foreclosures make it into the market. So it's going to increase the supply a little, but again, not too much and not very quickly. And another group of people, those who chose forbearance and are unable maybe to get caught up with their mortgage, may find themselves in another situation where they need to sell their homes as a last resort so that they can save their credit. So we may see them sell as well. Don't expect those to be short sales or distressed properties. And I don't expect enough of those to enter the market to shift it into a buyer's market. Listen, even if they do hit the market, they're going to sell quickly in this market. And most, if not all of those homeowners have equity, so they're going to be retail sales. This is an important point, going back to something I said earlier. This is a very different set of circumstances than what happened during the financial crisis. They cannot be compared whatsoever. So if you're holding out, waiting for prices to drop, and eventually decide to buy buy later, there's a good chance that the market's going to have pushed prices even higher than they are today. So what that means for you is that the money you spend in the future is going to buy less of a house than you could buy today, or you're going to have to spend more money to buy the same house. There's no other way around it. There really is, I think, one other important consideration, something else that I think is we have to look at here, and that's that you and me as a society, we tend to be extremely resilient. We find ways to adapt. We find ways to change. We always have. I think we always will. It's reason to be optimistic about the housing market and reason to be optimistic overall. History proves this out over and over, and we literally just witnessed it happen in 2020. I mean, demand outpaced virtually all projections of what we thought was going to happen, and we're going to end up probably 1% or more above the sales volume of 2019 as 2020 comes to a close. So lower supply and similar demand for housing is an equation that simply can't lead to lower prices. There's just no way it can happen. So if you're considering buying a home now or in the future and you're still on the fence, I am definitely of the opinion that waiting is going to cost you more money than buying right now, and prices are much more likely to rise than they are to fall. It's my opinion that there will be no market crash in 2021. Interest rates are too low, inventory rates are too low, and demand is probably going to stay stable for all of 2021 or very close to it. So finally, if you've enjoyed this video, please make sure you subscribe to my channel, hit the bell icon so that you can get notified when I upload new videos to my channel. Until then, thanks for watching, and I will see you soon.